No, I think I'm here.
Sir, join. Yeah, have you joined? Hello, sir. Khushbu here. You have joined, no? The call. I'm not. No, it's at 12. Yeah, it has started.
Welcome to the launch of Early Salaries Salary Card. We thank everyone for today attending the launch with us, and we look forward to introduce a new product offering from a fintech lender to change the way digital lending and cards are going to be introduced to consumers. To launch the card, I'm going to first welcome Mr. Dilip Asbe, MD and CEO of National Payment Corporation of India, to come and talk to you. And also, I'd like to thank NPCI and RuPay for all the help that they have given us for us to introduce the new salary card in partnership with RuPay.
I congratulate Early Salary for launching the RuPay digital contactless card, and we have been working with a lot of fintechs to promote NPCI products like UPI, RuPay, and BBPS, NETC, and other products of NPCI. And Early Salary has launched this product in collaboration with NPCI, which is a RuPay card, which is a contactless card. And today in COVID times, the contactless products are preferred by the consumer to avoid the physical contact, and be it UPI, be it the RuPay contactless cards are the preferred mode of payments by the consumers.
Thank you, Dilip. We really thank NPCI to really help us introduce a true Indian, a true digital card, which can really change the way consumers look at credit in the country. Thank you very much. Now, I'm going to talk more about the launch for the day, the Early Salary Card. At Early Salary, we always believe technology has to be disrupted so that we can help more and more consumers. We learned that close to 90% of the consumers are unable to get credit when they need instantly. It almost takes them 15 days to get access to a credit product. We also learned that more than 65% of the people are unable to get credit in longer tenures, and they don't have control on how to choose a better instrument when they need to purchase something larger, make an emergency payment, or shop to their delight. To solve for many of these problems and build better features, we're introducing the Salary Card, India's first and most unique, completely digital card on a mobile app. What's more, you can actually do end-to-end customer onboarding journey, get the card operational, literally in real time on your mobile app, available instantly the second you want it. What's more, it allows every consumer to get onboarded in a completely zero-touch format, which today is the need of the hour. With the pandemic hitting us all, we have all been concerned about not physically interacting with people, not taking out our plastic to swipe. In fact, we saw close to half the consumers that we interact today with are very scared to even swipe their credit card or swipe their plastic at a retail establishment. And that gives us a few more ideas of how to introduce a much superior offering to the Indian consumers. The Salary Card allows you not only to get onboarded in real time, but to get the card activated using a video KYC stack, using a zero-touch customer onboarding journey, a real-time decisioning, and what's more, you can actually get the product end-to-end running on your mobile phone and ready to give you credit in under 10 minutes. Next, the dynamic limit facility is something very interesting, and as we meet more and more consumers, we learned that this was something which they were really looking forward to. Many consumers came and said they would like to make an emergency payment at a longer EMI tenure. They would like to fund for their child's school fees, but they want a longer repayment option. Sometimes we have to go and make a larger product purchase. We love to buy a TV, fridge, or a washing machine, or a mobile phone, but it's very difficult at the point of sale to do the entire transaction. When online, sometimes my card gives me an EMI option, sometimes it does not, sometimes I don't have a card. Can I actually produce an instrument in real time using those features? And I think the Salary Card is here to solve many of these problems. Now let's talk about the exact key features of the product. First, it's a universal card available on your mobile app instantly. Second, you can choose in which category you like to spend how much and what type of limits do you want on repayment. Third, you can restrict card usage when you like. You can also control repayment tenures. It also gives you the entire flexibility to control the entire product just from your mobile phone. Let me give you a quick demo of the Early Salary app and the Salary Card. First, as you open the new app, you notice that the card is right there and it's very secure and it's well protected. Next, you have to enter a unique PIN so that you can access the card functionality, and every time you open the card on the app, you have to enter the PIN again. What's next is you can set the maximum limit of how you want on the card program. And after that, you can see various categories. You can choose from shopping, you can choose to electronics, and you can choose how much you want as your repayment tenure in each of the categories. I think this is one of the first times a card program has been introduced with both these functionalities coming in real time and allowing a user to start using his card the minute he downloads a mobile app and gets approved. Consumers always look at great offers, and it's our job at Early Salary to make sure that we partner many people to get you the best offers. We also like to thank RuPay for introducing many partners and many offers to our customer base, and we hope that our consumers will really like these offers and benefits that we bring on the table. I'd like to thank many of our partners who have really made sure that this program comes alive. Firstly, I'd like to thank Transcop to be behind us to making sure that we can introduce a strong value proposition in the market. Second, our technology partner M2P to enable the entire platform. Next, I'd like to thank our video KYC partner Hyperverge, and of course, thanking MCT also. Thank you everyone for coming for today's launch event. It's a great honor to host all of you here today. As we start the day, I think one of the most important part is really bringing in the product which is differentiated. I think as a startup, we are very privileged that we're able to execute to perfections all our plans and keep coming back with new and new products to our consumers. Earlier this month, we celebrated our 5 years of being in existence and how we introduced the credit suite to a larger set of customers. Over years, we have managed to seek out to many Indians to solve the problem of credit. And today we believe that convenience is coming in a much better manner with us launching a card. I'm going to request Ashish, my co-founder, to now talk and introduce the guests. Thank you.
Today's event is a very special event for Early Salary, and it really marks a new era for us. And with this, we introduce our salary card as well as checkout finance to the world. Today, for the guest of honor, we have Mr. Arvind Gupta, who has graciously agreed to be at the event. Mr. Arvind Gupta is currently the head of Digital India Foundation and the founding member of iSpirit.in. He is an adjunct professor of data and digital economy and serves on the VCIC committee of India's Startup Funds of Fund. He has been a board member at L&T, State Trading Corporation of India, and also served as a CEO of mygov.in. He has also spearheaded BJP's National Technology Department for 3 consecutive terms. He works very closely with policymakers on the issues around digital economy, innovation, and citizen outreach. He is passionate about digital revolution and played a pivotal role in the digital ecosystem within government as well as for the country as a whole. We welcome Mr. Gupta for the event, and we are truly honored to have him with us today. Our second panelist is Mrs. Pravina Rai. Without NPCI's support, a salary card was not possible. She is the chief operating officer at NPCI and in charge of formulating and deploying the marketing, business development, product management, and operations strategy to achieve NPCI's overall strategic objectives of simple, secure, and seamless consumer experience, and further the overall rapid digitization of the Indian payment systems. Ms. Rai drives product penetration, reach, and visibility of NPCI's offering through suitable partnerships. She has over 20 years of extensive experiences and has built expertise in various facets of payments, card, retail transactions, wholesale, and commercial banking. We are thankful to Ms. Rai to be with us today. We have Mr. Kiran Shetty today. He is an industry leader and dynamic personality. He is the CEO and regional head India and South Asia for Swift. He joined Swift in June 2016. Kiran has over 2 decades of experience in the financial services industry with top Fortune 500 groups like Bank of America, General Electricals, and Western Union. He has been recognized with the prestigious National Award for E-Governance for driving financial inclusion in India by Government of India in 2016. We welcome Kiran to the today's event. We have Ayan Agrawal. He is a Vice President Payment Systems at Transcop International. He did his education from UC Berkeley, while he also worked as a teaching assistant for entrepreneurship there. He has spent his early career picking skill sets to lead up financial services businesses in India. Currently, he leads the payment and prepaid instrument division at Transcop, which has pioneered in onshore and offshore remittances and payments card businesses in India. They have built a full stack co-branded card platform, and they work with many fintechs and the aggregators in India. Today we have with us Srinath Sridharan. He is a strategic counsel with 24 years of experience with leading corporates across diverse sectors, including automobile, e-com, advertisement, and financial services. He has held board memberships across regulated, listed financial services entities in the past, well versed with contour of governance, board level strategic expectations, challenges of organizational redesign, and related culture and communication imperatives. He is the moderator for the event today, and we welcome Srinath and Srinath to the event. We are privileged to have a power pack panel today, and on the panel we have Akshay also. He's the co-founder and the CEO of Early Salary. And now I will ask Mr. Gupta to have a few words on the event and how he sees the Indian ecosystem evolving.
First of all, congratulations, Ashish, Akshay, Ayan, with 3 years on this panel and in this chat right now. You guys have really aced it in terms of launching this very, very new age card, which is really democratizing credit in times that we live in right now, and a completely, truly digital first product. So I just wanted to make some opening comments, which is, today what we are seeing is a remarkable shift in the way not only India, but the world will look at technology and technology-oriented products. India has, of course, led that way. We are, as you know, the only country in the world which has a public goods approach to digital infrastructure. And NPCIL, of course, with its UPI is seminal in that, because we September, I think UPI did 1.8 billion transactions in less than 4 years of getting launched. So I think India is really transforming how we are democratizing the financial infrastructure, availability to everything. The whole success of Jan Dhan accounts, which are numbering over 400 million, 40 crore accounts today, is a testimony to that. But what I think excites me going forward is that we have this whole clarion call of a digital India, self-reliant India, the Atmanirbhar Bharat. And it's only through efforts like yourself, which are building on top of the India stack, if you may call it, with its video KYC and UPI, the UPI payment rails, which is really going to change and alter the whole consumer experience. And the couple of points I wanted to raise was, if you look at this whole process is, it's of course from a credit perspective, making credit for all, but also generating a lot more data points, which is something that we would have lost in the earlier systems of credit. Credit is still something that has gamed the fear, and we have had. I mean, this morning's one of the newspapers carried a headlines that how the fear of the pandemic was used to do predatory credit to a very, very to all sets of sections of society. So I think bringing out really formal credit, transparent mechanisms which are digital first is the way to go forward. That's the way to innovate, not only for India and then for the rest of the world. And that's the tie-in with the call of the Prime Minister to have make for India, solve for India, and then sell to the world approach. Again, as per my opening comments, I would like to also mention that while doing this, we are adding not only to the economic activity in India, but we're saving a lot of interesting. We're saving a lot to the GDP. some research that we've done, and I wear multiple hats. One of the research hats that I wear, I can tell you that the initial study suggests that just by using UPI payment rails, we save upwards of 10 basis points of the GDP that remains back in the country. And two, we enable another 10 basis points to 15 basis points of incremental economy every year. So it's an incredible achievement that we have NPCIL, of course, CII with us today. Mrs. Rai is there, but more than that, they have opened up this ecosystem for everybody else to innovate on top of it. It's a very unique model. That is really, what Akshay said in his opening comments, disrupting how technology is going to make the truly digital first experience come true. The last thing I want to say is that India is seeing a remarkable move towards truly digital first approach. We have seen the highest digitalization in the last 6 months ever. And this is an audience that one needs to serve. Of course, there have been kids who've certainly been homeschooled and from a work study from home environment. But more than that, there's been a huge set of digital migrants who have just come on the digital platform. So if we package products with the right safety, security, and trust, the trust aspect will become very, very big in creating winning products, not only for today, not only for India, but for the rest of the world. With that, I really look forward to the panel discussion. I think it's an exciting era that we live in. I come, apart from all the hats I wear, I do want to share that I did launch a payments card, a kind of a payments card, and I wish UPI existed at that point in time. It was 2002, it was called Apna Card. So, I have a pedigree in this and I understand the kind of open innovation you have enabled UPI. So congratulations to you, RuPay, and the good folks at NPCI. Thank you.
Thank you, Arvind. And I think it's a wonderful address that you have set the pace for the conversation around the panel discussion. I think to take on from what you mentioned, the capabilities that India has built in the digital backbone and the way we think of finance is completely transforming. And there was a time that the only thing that we thought of finance was actual cash and to going to a physical brick and mortar structure to look at doing a transaction. And I think India has surely spearheaded some of the conversations globally. I mean, who would have thought that we would be able to equip 1.3 billion people with a unique identifier number and do a backbone of the JAM Trinity? And I think in that sense, which is what I want to set the context of the fintechs have been solving quite a few of these problems, and more so relevant because if I look at the soft power that we claim of the demography, I mean, a large segment is Generation Z. And the conventional brick and mortar cannot deal with Generation Z's aspiration in terms of solving for their credit. So, which is what I want to start off the panel, with Praveena first, of saying, how do you see the consumer behavior patterns that have changed due to digital payments, and more specifically leading on to credit availability in the last few years? UPI, of course, has a big impact on the way we think of credit, the way we think of even every single transaction. And I think if you look at the data, the small ticket size transactions are also growing. Again, credit to NPCI's effort. So in this, what are your views and what are the trends that you've seen?
Yeah.
Thank you, Akshay and Srinath. Great to be on this panel. And congratulations to the early salary team for a very well thought through product. And I just saw your video on the launch. It looks pretty exciting. Coming back to your question, I think the numbers speak for themselves. Needless to say, we've seen a boom in the kind of exponential growth of digital payment transactions in India. And this has been driven from both sides. It's been driven by consumer acceptance because of the elimination of a lot of friction that used to exist in the process before, as well as the deeper penetration and the wider reach that we have on the acceptance side. So, earlier it would have been probably slightly larger merchants who will have a POS terminal on which a digital payment could be accepted. But clearly today it's gone into small merchants, your small Kirana stores, through the length and breadth of the country. So, both these have been phenomenal drivers of digital payment growth in our country. And of course, this is all on the back of Aadhaar and UPI and the entire payment stack that we have over it, with RuPay also playing a very important role. What I would say is that now that we have data that is available, and I think data being the basis on which credit decisioning happens, that clearly is a driver. Payment being a rail, the payments themselves forming the backdrop against which a credit decision is being taken. That's what you seem to be doing very well with your, full onboarding, end-to-end onboarding, in all of a few minutes. I think those are the kind of propositions we should see increasingly in the market. And this has not been there in the last, 2 to 3 years. So if we look at this in phases, I would say in the last 2 to 3 years, what we've seen is really the growth in the digital payment transaction, people getting more digital. One positive of the pandemic situation, if we were to look at a silver lining here, is to say that, people are getting more open-minded to digitization, right? The whole, whether it is regulatory, whether it is policy framework, whether it is, users and merchants, the whole open-mindedness and change of behavior towards digital payments has really improved. And now we will start seeing this change becoming far more significant, of that data then becoming part of the service stack, of which credit is going to play a very, very important role. So I think I would say that this is early stage there, and it's both in the banking and fintech sector that we will see this happening as we move forward.
Sure. Thanks, Praveen. Kiran, see how digital has changed. What's your view on that?
Srinath, we may have lost you for 10 seconds. Could you repeat your question?
Sure.
Yeah, Srinath, I couldn't hear you. Was that for me? This is Kiran.
That's right, Kiran. So the question for you is, your expertise and your organization straddles on the supply chain of money, and to where Praveena spoke about the digital transactions. How do you see the trends in the back end of monetary transactions? And of course, you also are seeing plethora of fintechs and banks also gearing up their digital backbone to serve the customers. So how are you seeing this entire aspect of hyper digitalization and digital payments coming through?
So yeah, first of all, my compliments to Akshay and Ashish for putting together such a powerful product. I'm very excited about the future that this holds in a country like ours. Like Arvind articulated, I see great traction with digital payments. He spoke about the numbers and all around, all about that. Now, coming specifically to your question, and if I were to get your question right, you're talking about the digital infrastructure and payments, how they are evolving. Is that your question, Srinath? Or?
That's right. That's right.
So, we see digitization as an accepted reality by all the community. We are a community-based organization owned by the community. We are a cooperative. And we see increased push coming in from our clients saying that please help us digitize further and further. And for those reasons, I'll give you one example. We came up with something called Global Payment Innovation, which actually works on the correspondent banking world. This is the first biggest innovation that has happened in the last 40 years, where we have actually completely made the process transparent through a DHL kind of a tracker, and which is available to the client as well. So a lot of those initiatives are coming together because of the demand and pull that we are seeing from the clients. And I see this journey only accelerating. And I believe that the companies that are gearing up in that direction will sustain and win. And that's the future of that path. I think it's only going to accelerate from here. And I keep referring back to Arvind's comments he made around the pandemic and the fact that digitization is accelerating. We see it all around. And I think both in cross-border and domestic for those reasons. And I think customers have to adapt it, like I pointed out earlier.
Sure, thanks. I will now ask Ayan to comment the question of hyper digitization and the trends that we're seeing in India, not just in the top 10 cities, but we're also seeing access to credit, small size credit, moving being picked up much faster across India and Bharat. So would like your comments on that.
Sure. Thank you, Srinath. And, I must say I'm honored to be part of this panel. And, Transcop and I have been involved with early salary since before its inception. And we're very happy to be launching a product jointly with, early salary today. And, in my view, digitization is no longer an option, or it's no longer something that you can choose to do. It's become something mandatory. Even if you go to the smallest stores, in tier 2, tier 3 cities, you see all these POS machines, you see all these QR codes all over the place. And NPCI and the regulators have actually done a spectacular job, in actually facilitating a lot of these payments and transactions. And the availability of credit to the consumers, earlier it used to be in the informal route, whether via, traditional money lenders where there's no real documentations maintained, or through the Hawala system or through loan sharks. But now, as we move into the formal, credit economy, it used to be with banks, and now we have NBFCs and lenders like Early Salary who are doing such a great job in providing instant credit, not in 15 days, which typically used to be the case, in any regular or traditional financial institution or a bank. But now you can actually get that credit in 15 minutes. And, don't take my word for it. I urge you to actually go on the Early Salary app and apply. And you will see that the whole thing takes less than 15 minutes, including the video KYC, like Akshay mentioned, as well as the onboarding. And you have a payment instrument with you, a 16-digit card number that can be utilized ubiquitously online anywhere within 15 minutes of you actually downloading the app. So that's something that was never possible, right? Money would have to exchange hands physically in the past, or you would have to go apply for a loan, do a lot of paperwork. This whole thing is digital, and you actually have funds at the end of the 15 minutes. And, the new population or the new age generation people coming in, with the penetration of smartphones, in the Indian market, especially in the salaried age group that Early Salary targets, it's a kind of a no-brainer that you would actually go ahead and not have to deal with any paper, whether it's in terms of forms, in terms of cash, or even have any kind of linkage to your bank account. The money is actually dispersed on the card itself, which can be utilized at all places. Contactless is obviously a great functionality of NPCI that we're going to be building upon. As well as the digitization. So like Akshay said, there's no plastic involved as of now. People don't want to use plastic. They're simply just happy to do everything online. And so I think that's working great. And Early Salary has over 10 million app downloads now, and providing credit to a lot of people under automated underwriting processes. And Transcop is happy to partner with them. And like you mentioned, like Ashish mentioned, we're powering a lot of the co-branded cards for a lot of fintechs, acquirers, aggregators, and startups, as well as industry giants. So we provide a full stack solution, and we're happy. In Early Salary, don't kill me, other partners. Early Salary is definitely our prime partner and favorite partner to work with. So thank you.
Sure. Thank you. So moving on to Akshay, what is that consumer behavior pattern shift that you noticed? Early Salary has been around for 5 years. And you've launched this program for the first time. Of course, you can always say COVID kind of catalyzed that and pushed you ahead. But what are the kind of consumer behavior shifts that you've noticed? Because it's all about consumers. Yeah, that's what you're trying to deliver. Akshay, we can't hear you. I think you're mute.
Thanks, Srinath. I think over the last 5 years, we have been able to aggregate a large amount of consumer demand. And that demand is actually showing the way consumers look at products, look at credit by design. I think earlier there was a time people used to take credit and buffer the cash with them. So for example, if they plan to go for a holiday, let's say 6 months down the line, for a Europe trip, they'll take a 5 lakh rupee personal loan and hoard the money in their bank, and then take Forex, take various transactions next to that, and manage that trip, and then come back and pay for that over years. And usually this person was much higher in age. You will see that person already having kids and family wanting to go for a large holiday, and that's why credit was coming in. what we're seeing is consumption loans now coming in and replacing the formal large personal loan market in a dramatic manner. Now, if I look at, we saw the first wave, which happened close to 8-9 years ago when the NBFC decided to get into the consumer credit market. And we saw Bajaj Finance, we saw HBD, we saw many of the banks stepping in this business to say that we will fuel product purchase, and specifically smartphones, electronics, were the first ones to come into picture. Now, today, lifestyle finance is the next wave coming in, and where fintechs have really come in and created the new opportunity. You are just 24 years old and there is a 3-day weekend coming in. Can you go to Goa and enjoy there? Why should you live in a PG when, if you have money for a house deposit, you can take up your own 1 bedroom somewhere and live, right? And there were instances where younger generation can get access to credit, and that's fueling the way customer acceptance comes in. So I think the first changeover we noticed was the rampant expansion in the financial services business. So if I look at today, the category seems to be growing at 24% per year. If I look at the demand which is created by fintechs, has actually grown by 8.5 times over the last 18 months. So they've really dramatically grown and they've become very mainstream. And they're also been able to enter into the mass spread of getting consumerism. So if I compare ourselves to the nearest, let's say the banking class product of credit cards, there are close to 45 million cards being issued to Indians over the last 37 years, while fintechs would have gone and issued credit to almost 45 million people in the last 2 years. So the number of people getting entered into this new format of credit is large, and it's very young, right? I would say in our entire panel, Ayan may be the only young person in the group who fits in the age profile of people who are looking to credit, who are at a consumption economy. But I think it's task of fintechs to really solve the problem of every line function customer. So he's young, he's middle-aged. How do we provide a product which builds consumption? And that's where we'll come into picture in a very large manner.
Thanks, Akshay. I mean, that's the statistics that you quoted about the number of years it took for the fintechs to catch up. It's interesting, but of course, this entire industry is all about disruption, right? Quickly catching up. So that leads me on to what I call the elephant in the room question, specifically for Kiran and Praveena. The credit is not a bad word anymore. I mean, we've seen the trends, the millennials and then Generation Z have accepted credit as a good one. But of course, with every digital or digitization effort that we all put in together, the direct consumer empowerment increases, but it also removes intermediary in payments all across, which means that the intermediary industries don't exist anymore because they're probably adding only some delta to the entire equation. They're not necessarily reinventing the wheel and recreating process. So what's your view from NPCI and SWIFT? So if I can go over to Kiran on this from SWIFT experience, and then I will move to Praveena.
Yeah. Srinath, thanks for that question. So that is the need of the hour. And if you have recently read the press, we came up with a new transaction management platform where we are saying that we are going to process every transaction in a way where if you look at a correspondent banking transaction, a KYC was done on a transaction every time it hopped from one bank to another. Through our platform, we will now have one KYC done at a central level such that everybody could benefit from it, thus bringing down the cost.
I'm sorry, we can't hear you very well. Maybe if you switch off your camera, then the voice will come out better.
Data that will further. Can you hear me, Akshay, now?
Yes,
Akshay,
this is much better.
Yeah, so let me restart by saying this. So at SWIFT, we believe in this. If you look at our latest strategy, we said that we are coming up with a transaction management platform. We see that customers are doing KYC at multiple hops when a transaction hops from bank A to bank B and finally to the destination bank. In our new platform, we will have a frictionless KYC done at the initiation of the transaction, and all the participants of that transaction will benefit from that one single KYC, thus taking away costs from the transaction. To my view, that is only going to get intensified, and people that are focused on doing that will succeed into the future. That's really my view, Srinath, in that context.
Sure. Thanks, Kiran. Praveena, your views on this disruption?
Yeah. I think disruption is the new good word, right? So I mean, it's there for a while, so there's no other way to do it. Over years, decades, centuries, that's how life has been created for all of us. If we continue to do things the old way, then we are losing the opportunities of the future. So I think there is no doubt, there's no question. In fact, I think the best thing for all of us to do is to keep disrupting ourselves. Even in NPCI, we would have a RuPay, a UPI, and so on and so forth. And we run these independently. Let them go and disrupt each other. That's fine. And if you look at what, for example, Early Salary has done, what I really like about it is it's sort of really bringing the power of partnerships here. So I think each one of the partners, be it Transcop or be it whoever is providing the video KYC service, and it's various people who are disrupting their own space who have come together. And ultimately, the beauty of end product that gets created, which is then disrupting space in the consumer's mind. This is the only way to do it. I mean, there is absolutely no other way to do it. We have to continuously disrupt what's happening in the market and disrupt ourselves. However, disruption for the sake of it, you don't start off saying, okay, now I'm going to disrupt. You have to keep solving problems. You solve the customer's problem. If the customer's problem is not getting solved by what's happening today, then it needs to be disrupted so that the customer problem gets solved. So it's always in the context of the problem to be solved, and it's always in the context of the customer.
So from that perspective, I mean, what do you mention about the video KYC? I mean, let's say for a moment, you wear the hat of the industry, if I can use the word aggregator to an extent, kind of self-regulated body to an extent. What will be your, let's say, views on the fintech companies have been adopting video KYC, though they're not regulatorily mandated. Some of them have the capability already. And the fact is, the fintech companies are ready to move very, very quickly with some of these the consumer conveniences vis-a-vis the traditional players in the industry. So but again, having said that, what would be your word of caution to some of these sectoral players in terms of digitizing the entire process for the consumer?
No, I think you have to look at the fine balance between what the regulatory framework is, right? What are the compliances that are required, and then what really is the customer need, and how best can that customer need get sorted. So within the realm of the possibilities, within the realm of whatever is permitted, I would say, break the boundaries. Just if that's what the customer needs and it solves the purpose, then it needs to be done. However, using the right risk framework would be extremely critical, so that we are not caught unawares because we were so excited about a product and a customer experience that, perhaps somewhere the industry misses out on the risk parameters. So, it's the balance of risk and compliance on one side with product and the customer experience on the other. And if this balance is achieved, then I think, it's a great outcome. And then you're more prepared for potentially what scenarios could emerge and, how to mitigate those scenarios, because it's to some extent been thought through. Having said that, when new products emerge, there would be the unknowns that, need to be faced. And as long as enough thinking has got into it, the unknowns will also be dealt with suitably.
Sure. Thank you. So, Kiran, what are your views on the same topic? I mean, video KYC being the favorite topic that seems to be floating around now. And I think from the, let's say, the overall finance industry perspective, I think every quarter we seem to be having a flavor of development. So if after video KYC, we are going to have something else as well. So if you just do some blue skying, what are those wish lists that you would have?
No, I believe that we are at a very advanced stage of maturity when you look at the other parts of the world, and you have to recognize and appreciate that India has already taken leadership in terms of a lot of these initiatives in digital payment. And I think we lead the world in that direction. I believe that incremental innovation on these will probably be not as many. And I think, like I said, India will lead the way. But digital adoption, digital change is the game and will be the mindset into the future. And we'll all have to be agile to keep watching the trends and patterns. But I want to again reiterate that India is leading this space, and the world will follow what we do into the future on the digital side.
Sure. And do you have any views on what next, the wish list that you see from Disruption Point?
Oh, yes. So I'm going to actually build off of what Ms. Rai said regarding disruption. So what I think, the word that would aptly suit this kind of a product or, India's digitization is actually collaborative disruption. So as you can see, the disruption was not just done by Early Salary or by Transcop or by Hyperverge or NPCI. It's a factor of all of these, different moving parts and companies working together to create something that the consumer really benefits from. So I think that's a very innovative thing. And like Kiran said, India is leading the world in many of these digitization disruptions, especially in the payments industry. So UPI has actually become a role model, and there's been case studies done by different central banks of various countries to kind of see how this can be emulated in their economies, because it just works so great. For Transcop also, we have many firsts, in our kitty, including the first BIN that was provided to a non-banking entity was Transcop. First contactless cards for a non-banking entity was Transcop. And now with Early Salary Video KYC, the customers that are being onboarded today are the first video KYCs that have ever been done for a non-bank. The only two other banks in the country are Kotak and HDFC, or a few others who are doing video KYC, but this is truly a first for a non-banking entity, a Transcorp as well as Early Salary. And I really want to thank NPCI as well as the regulators for kind of catalyzing or facilitating this disruption and this digitization by way of making regulatory changes that are more cohesive to the business environment and the payments industry, as well as UPI 2.0 and FASTag, also kind of really changing the game. And if you go through a toll now, it doesn't take that long. So these are some really good things that NPCI is facilitating. Transcorp is leader in all of these, as well as the central regulatory body RBI is also very reasonable about things. So.
Srinath,
thanks.
I
And so
because I've actually seen this market and evolve very well. I think you added a very good word. How does it disrupt and how the markets will change? I think there are two components here. First is the cost disruption which takes place. If you look at the way we have looked at the card program, is we have to bring the cost of the card dramatically down so that it can actually work. I think today our ABC costing says that the incremental cost of issuing a card is down to just 19 rupees. Right, so it really changed, and this is coming to a customer, and that's why we're saying it's okay. We can take the business and pass it on to a customer. That's the first component. The second component is the entire cost of customer onboarding. Right, if you look at it classically in ABC costings of a lending product, it was said that between 4,000 to 6,000 rupees is what you need to is your onboarding cost at OPEX level to manage a transaction. Today, most fintechs pride to say it is anything between 200 to 300 rupees. So they brought that cost down to such a level that it's possible to do operations, and because of which the customer disruption takes place. Why does UPI become so successful? Because it is free. Because you bring the cost down to such a level that people can accept it and they can start using it. So I think the entire economy will do better if we can bring down the cost of many of these operations. And why we have chosen RuPay, why we have said that there are innovations available and many partners are doing it. Can we bring mass scale volume to it so that cost comes down faster? Right? And I think that is where the actual innovation will take place. The next innovation is taking place where I think both the regulator and the government is facilitating the opportunity to do more things. Right, the entire access to Aadhaar, entire access to repayment instruments, entire access to UPI-based payments, entire access to account aggregation is actually making the new disruption take place. It's coming across payments, it's coming across banking products, it's coming on fintech, it's coming on lending, it's coming on blockchain-based enabled transactions. Now, these are much larger, and if you look at India as one of the forefronts in the entire innovation, I believe that both the regulations in India and all the regulating authorities are driving this innovation, and it creates one of the best places to actually build new age companies who are willing to accept this new technology, new way of doing business to reach out to the end mile customer.
Thanks, Akshay. So that leads on me to another question more about the chicken and egg story that we speak about, right? As Steve Jobs is quoted to have said, customers don't know what they want unless you give it to them. So would you develop something that customers would see and love? Or would you look at trends and say that this is what we need to develop? I mean, both have their pros and cons.
So there are both ways. Let me take this answer first, right? I think innovation starts by someone waking up at 2 o'clock in the morning and writing a case study. This looks like a good thing I can do, right? But usually it is backed by an insight in life which happened to me, right? I would say if you look at most of the Apple innovations have been because they felt that there was a product that they personally could use better. In our case, we felt that I personally couldn't borrow in real time when I wanted to. It took just too much of an effort. And that's why I think when me and Ashish set out to create, we said, let's first solve for people like us, then we'll solve for more people, right? And that's how any problem gets solved. But today, the acceptance of consumers are much faster. When you come out with a new feature or a new product, it's great to see how many people write back to you and like, hate, or give a feedback on it. I think when we were building the salary card program, we actually went back to our customers twice. We actually first wave introduced a product, then introduced a survey, then again introduced a product, then again got a survey back. But it wasn't like a few people commenting. We had thousands of people in minutes answering back what could be the next feature, right? Why would they like it? What is the new features that we need in the product? I think the innovation is both ways. You come back with a product, you don't have to wait for 5 years to launch it. You can be in the market in under 3 months, get the feedback, improve it, again come back with a much superior product.
Okay, Pravina, I mean, any view on this, the chicken and egg story for innovation, more from innovation perspective?
Yeah, so I'm a big fan of not going for incremental change. I think if we only listen to the customer tends to operate from the perspective of what they are already accustomed to or what they are seeing. So at max you will know how much behind your competitor you are, right? And then you will do a little bit of a makeup game. You'll do, let me do this little bit feature, let me do this small feature functionality. Then it becomes a very small step change. And I don't think winners are created from small step changes. So it needs to be a combination of identifying and anticipating that need in the market, and then coming up with how that need gets addressed and resolved. And the beauty of both of these coming together really creates the big innovations that we see as being very successful.
Sure. So the innovative drive, let's say that a company like Early Salary does and an institution like NPCI does, have a huge implication in terms of time and resources. An institution, people think institutions have all the time and money on earth to do it, but it is not so. I mean, that's why we use the phrase frugal innovation. So, and it's always comes with its own constraints because there are so many stakeholders to answer to. In a sense, probably Akshay and Ashish can get away with something far easier than you will have to justify it to your board, the stakeholders, investors. So, I mean, how long does it take for, let's say, an NPCI? This is more a public interest question. And at a given point in time, how many projects do you keep on working on before something sees the light of the day?
So, I think I really like the points that Akshay made on frugal innovation, because many of these great ideas, can fall by the wayside if they are going to take you, crores of rupees to execute. So the ability to bring that cost of onboarding to, the 200 rupees that he mentioned, the ability to bring that cost of the new card to a very, very palatable value. These are very critical components. So in NPCI, we looked at what we need to do. We have crossed a decade, 10 years down. So we are saying, what's next for us? So we've actually structured ourselves around 3 verticals, what we call the run, grow, transform. Because we had to look at what we need to do for next generation products differently from what we do today. So that sort of disruptive innovation that we were talking about. So, our disruptive innovation happens in our transform division, which runs the innovation lab, API accelerators, really deals with startups and so on. Between run and grow, run is, if you look at our more products which are like the ATM switching, and products that require a certain level of investment, but however, the focus is to keep them running, keep them, high performance, and run them at a really low cost. Grow is where, that sweet challenge lies, right? How do we continuously innovate? How do we continuously bring, how can UPI go from UPI to UPI 2.0 to UPI AutoPay? How can RuPay go from a debit card to a prepaid card to a credit card? That entire journey from a product roadmap. And how do we do each one of these things in a way that continues to deliver a very effective, cost to the market while addressing risk and security and all the other requirements that we have. So I think this is really the I would say, philosophy that we use in NPCI. And I think it's so far worked well, but we have to continuously keep challenging ourselves here.
Thank you, Praveena. So moving on to Kiran for the same question in terms of innovation, and as Praveena mentioned, measuring impact of those innovation, because that's the fundamental challenge of any innovation.
Yeah, so from our perspective, we call it responsible innovation. We have a lab within Swift, which keeps looking at trends and various opportunities that keep emerging. We try them in the lab for scale, for making sure that they can add value, and only then do we start working on them. So for us, being a community organization, we look at innovation as a responsibility, but also ensuring that we are not getting clients to invest with a short-sighted view on anything. So it goes through a very rigorous process through our labs, and then kind of comes into fore, and then we move it forward. Like I spoke about GPI, which is a payment innovation where we are changing the way correspondent banking happens. It's been the biggest innovation that we've done in the last 40 years. Where a transaction is now moving to almost real time from where it could take up to 3 weeks, right? So those are the things that we work on, and we only work on it responsibly from a long-term perspective, and from a perspective that innovation and investment doesn't go into the drain. So that's how we operate, Srinath.
Sure, thanks, Kiran. So with that, in the interest of time, I would like to wrap this conversation. It has been, I think, insightful. Lot many points we're debating on, and as I generally like to say, until humans are downloaded, the digital disruption will continue as being a favorite topic. And with that, thank you, Praveena, thank you, Kiran, thank you, Anne, for your inputs and insights. Truly appreciated. And Akshay, would you have?
Thank you, Srinath. Thank you.
Thank you.
Thanks, Srinath.
Thank you. Now I'd like to invite the sections of the press, the media friends who are here to post